The financial world is buzzing with a development that many once dismissed as mere speculation or online chatter. What if we told you that, at this very moment, a currency long confined to the fringes of global finance has made a sudden, undeniable entrance onto the world's most powerful trading screens? It's a profound shift in perception that has sent a jolt of surprise through global markets, forcing seasoned analysts and professional traders to sit up and take notice of an economy. They thought they knew the Iraqi Dinar IQD. A currency often discussed in hushed tones of fervent belief or open skepticism is now, remarkably, showing up live on platforms like Bloomberg and Reuters terminals around the globe. This isn't a theoretical discussion anymore. It's a measurable, real-time data point on the ticker, displayed right alongside established heavyweights like the US dollar, the euro, and the Japanese yen. The sheer presence of the IQD in this environment marks a significant inflection point, compelling everyone from hedge funds to economists to swiftly process the implications of this unexpected integration. For years, many financial professionals viewed the IQD as an economic relic, a symbol of post-conflict chaos that seemed unlikely to achieve genuine international standing. Yet the apparently impossible has transpired. The dinar's visibility on these premier financial networks signifies that it has crossed a crucial threshold, moving from a niche topic of speculative interest to an entity recognized by the global financial architecture. This visibility is not simply symbolic. It suggests a far deeper integration into the machinery of global capital flows. The trading floors in financial hubs like London, New York, and Dubai have become instantly electric, a testament to the fact that when money makes a move, the world pays attention. As screens update, brokers and quantitative algorithms are reacting to the unmistakable presence of the IQD, now featured among the real-time currency pairs. Initial reactions ranged from utter disbelief, scramble, to refresh the data feed, to a state of urgency as the reality of the situation sank in. This is no temporary technical error. For the first time in modern memory, the Iraqi dinar is being quoted with live bid and ask pricing. This capability is fundamental. It means the intricate global infrastructure for trading the systems for execution, liquidity, and settlement has formally acknowledged the currency. The appearance of live pricing on such terminals is a technical signal of readiness, implying that the necessary foundations for data integrity and institutional participation are now in place. This is a moment of personal vindication for individuals who have long held physical dinar notes, often facing ridicule for their unwavering optimism. They were frequently told their investment was nothing more than paper dreams. But today, those very notes correspond to a verifiable live market data feed. This connection validates the tangible link between the currency in hand and its representation within the high-stakes, real-time world of global trading. Across major financial institutions, trading desks are in a frenzy of activity, rapidly adjusting risk models and integrating the IQD into algorithms that were never designed to manage it. This confluence of chaos and unprecedented opportunity has become intertwined. As the very first legitimate trades involving the dinar hit the global system, the entire financial community is holding its breath, keenly watching to see the immediate outcome of this monumental launch. The sudden inclusion of the Iraqi dinar on these major global terminals is not a matter of random chance. Such a development strongly suggests a level of deliberate coordination, planning, and high-level approval within the international financial community. For a currency to appear on these prestigious feeds, it must satisfy a complex checklist of regulatory and technical criteria, including rigorous data authentication, compliance vetting, and formal clearing agreements. This deep-seated integration points to a significant, pre-planned change that occurred quietly behind the scenes, indicating potential involvement from sovereign governments, powerful financial institutions, and possibly central banks. The groundwork for this moment has been laid over the last decade by Iraq's own efforts toward economic reform, which included crucial updates to anti-corruption frameworks and improved management of foreign reserves and oil revenues. The full-fledged integration of the IQD into global data systems represents a peak culmination of these internal efforts. It strongly suggests that international partners, potentially including global clearinghouses and significant correspondent banks, have finally concluded that the dinar merits a legitimate presence in the global foreign exchange market. Regardless of whether this action foreshadows a future revaluation, a redenomination, or simply increased formal transparency, the effect is the same. The Iraqi dinar is undeniably visible, measurable, and now potentially an actionable asset in the global financial sphere. In the world of finance, visibility changes absolutely everything. It alters perception, encourages participation, and becomes the engine that drives the flow of billions in capital. This heightened presence demands that the currency be taken seriously by major financial players for the average individual who bought IQD following Iraq's currency restructuring in 2003. This moment is deeply personal. Their long-held hope that stability would return and value would rise now has a tangible reference point. However, this is also a moment for extreme caution. The appearance on a terminal does not automatically guarantee immediate revaluation or smooth convertibility. The journey from a simple data feed to a truly liquid, functional currency is a complex path. It is fraught with challenges related to exchange mechanisms, strict anti-money laundering compliance, taxation laws, and cross-border settlement complexities. The initial period will likely be defined by intense volatility, with wide spreads and a high probability that speculative activity could cause market distortions before a new equilibrium can be established. Amidst the emotional excitement of seeing their long-term belief validated, investors must maintain a strong sense of reality. Markets ultimately reward a patient, strategic approach, not impulsive decision-making. This monumental event could indeed signal the true start of Iraq's comprehensive reintegration into the global economy. Or it could potentially be the spark of a brief, intense, speculative frenzy, whatever its eventual trajectory. This day will be recorded as the moment the dinar re-entered the global conversation, not as a flimsy internet rumor, but as an officially recognized financial asset within the world's premier financial networks. The story of the Iraqi dinar has just begun its most significant chapter, a journey that is equal parts historic triumph and profound cautionary tale. Beyond the immediate market curiosity, the implications of having the Iraqi dinar quoted and tradable on global platforms are vast and potentially transformative for Iraq's sovereignty. One can imagine a future where major trade agreements, such as those for Iraq's vital oil exports and critical imports, could be settled directly in IQD, reducing the nation's total dependency on U.S. dollar transactions. Furthermore, such a shift could enable Iraq to issue debt in its own currency, allowing both domestic and international investors to hold bonds denominated in dinar rather than foreign notes. These developments have the potential to fundamentally shift the balance of power within Iraq's financial structure, providing the country with far greater control over its own fiscal and monetary destiny. However, this grand vision is not automatic. To fulfill this potential, Iraq must consistently demonstrate rigorous policy discipline, unshakable stability, and transparent governance. The initial excitement of gaining global recognition must be promptly followed by the difficult, patient work of credibility building. Financial markets may cheer today's announcement, but they will relentlessly demand tangible, sustained proof tomorrow and for years to come. The dinar's long-term future will be determined, not by the initial flurry of headlines, but by the steadiness of its stability, the predictability of its monetary policy, and the resulting trust it garners globally. Appearing on the terminals is merely the first step. The dinar must consistently perform there reliably and competitively if Iraq is to successfully anchor itself as a legitimate financial participant in a deeply volatile global environment. Even amidst the surge of enthusiasm, a healthy level of skepticism is absolutely warranted. Experienced economists and traders understand that visibility alone does not guarantee durability. Key questions echo across the trading floors. Will liquidity remain sufficiently deep to sustain real institutional flows once the initial excitement wanes? Will conversion into stronger, established currencies remain seamless, or will friction emerge as volumes intensify? The most crucial question remains whether central banks will ever officially choose to hold the IQD as part of their national reserves, which would be the ultimate signal of long-term international acceptance. These are not academic debates. They are practical questions that will determine if the IQD ultimately becomes a respected peer or remains a temporary novelty. The path ahead requires consistent policy, credible monetary management, and careful integration into regional and global clearing systems. Early signs of market confidence can be extremely fragile. Sudden, unexpected policy reversals, the imposition of capital controls, or inconsistent regulatory enforcement could easily undo many months of preparatory progress in a matter of days. Nevertheless, this day undeniably marks the first concrete, tangible step for the IQD, moving it conclusively from the realm of theory and rumor into verifiable market data and a new reality. Whether the currency ascends further depends on the inherent strength of Iraq's institutions, the unwavering steadiness of its reform efforts, and the patience of investors who are willing to look beyond the inevitable initial volatility to grasp the long-term potential of a nation, striving to reclaim its financial identity. What is unfolding now is not just financial. It carries significant geopolitical weight. A nation's currency is far more than an economic tool. It is a powerful symbol of sovereignty, national credibility, and strategic alignment. By pushing the IQD onto global trading screens, Iraq is effectively making a clear declaration: we are here, and we are prepared to engage as a serious player. This action signals Iraq's clear intention to move beyond being viewed solely as an oil exporter or a conflict zone to being recognized as an emerging financial participant with a firm ambition for economic independence. The inclusion of the IQD alongside the world's major currencies also carries substantial diplomatic weight. It suggests a strong commitment to complying with international financial standards and hints at a potential alignment with key international banking systems. However, this symbolism must be backed by substance. The credibility of this powerful message will be relentlessly tested by Iraq's ability to maintain high levels of liquidity, transparency, and consistency in its market behavior. The appearance is the first powerful move, announcing Iraq's intent to reclaim its financial destiny on its own terms. Yet risks loom large even amidst the justified celebration. Early turbulence in any newly tradable currency can be brutal and unforgiving, and the IQD will likely be no exception. Price gaps may open without warning, liquidity could instantly evaporate, and trade orders might fail to execute cleanly as global infrastructure adapts to the sudden influx of new volume dynamics. This is not a stable, mature market. It is the financial equivalent of a frontier where significant opportunity and very real danger coexist. Participants who rush in, driven by raw emotion rather than a clear, measured strategy, risk sustaining serious losses. Even sophisticated financial institutions will proceed with extreme caution, deploying stringent risk controls and limiting their initial exposure, until reliable trading patterns can emerge. For retail speculators and long-term dinar holders, this environment demands constant vigilance and strict discipline, as these traits will ultimately define survival. The road to genuine stability will inevitably require months, if not years, of market adjustment. The wise will view this development as the start of a process, not an instant jackpot moment. As history repeatedly shows with every emerging currency, the early phase is consistently volatile, deeply unpredictable, and simultaneously filled with both immense promise and significant peril. Iraq's immediate challenge is to skillfully manage this volatility, harnessing it to build forward momentum without ever allowing the initial excitement to completely overshadow the crucial need for regulatory and monetary control. So, for anyone holding Iraqi Dinar or those newly intrigued by this historic development, what should the immediate course of action be? The first and most important piece of guidance is simple: do not panic or act impulsively. Emotional decisions are the absolute enemy of sound and rational financial judgment. The second step is to become thoroughly educated. You must understand precisely how your specific banks, brokers, or local exchanges are planning to handle IQD conversions, redemptions, and settlements. Fees, transfer times, and the stability of liquidity channels can vary dramatically between platforms, and operating from a position of ignorance can be tremendously costly. Third, strategically stagger your exposure. A cardinal rule for the smartest traders is to manage risk by scaling in and out of positions, never committing all their capital at a single, unpredictable moment. Fourth, if it is at all possible, seek professional, qualified advice. Foreign exchange transactions, particularly those involving newly tradable or volatile currencies, demand a well-thought-out strategy, not merely blind hope. Finally, you must be mentally and financially prepared for intense turbulence. This moment is undeniably historic but remains completely untested. The global financial system will have to adapt, and it is a certainty that not every participant will navigate this transition successfully. Therefore, you should treat this not as a guaranteed promise of overnight wealth, but rather as the complex, unpredictable birth of a long and uncertain financial ecosystem. The frontier has opened. But the terrain is rugged. Those who combine an unwavering patience, careful prudence, and comprehensive knowledge may one day look back upon this moment as the true start of something extraordinary. Conversely, those who relentlessly chase quick, easy gains risk finding themselves thoroughly lost in the inevitable storm of volatility that always follows monumental, historic change. From a broader vantage point, this moment has the potential to subtly shift the entire landscape of global currencies. For decades, the global monetary hierarchy has stood virtually unshaken, the US dollar as the central reserve anchor, the euro as the key continental counterweight, and the yen as Asia's stalwart of stability. Beneath these towering giants, dozens of smaller currencies have lingered on the margins, rarely re-entering serious international settlement. Today, however, that established paradigm is facing a profound stress test. The live emergence of the Iraqi Dinar on Bloomberg, quoted directly against the world's leading currencies, opens a fundamental philosophical and structural question. Can a previously marginalized currency genuinely find renewed legitimacy through sheer discipline, the power of market data, and national determination? If the IQD successfully demonstrates sustained liquidity and resilience, it could very well inspire other dormant or underrepresented currencies to seek their own revival. Nations that have long been relegated to using foreign intermediaries for their trade and finance could now envision the tangible possibility of reclaiming their own monetary independence. This is a subtle but profound structural shift, focused less on immediate valuation and far more on the core concept of national sovereignty. The global balance of financial influence may slowly begin to tilt toward a more plural, decentralized system where smaller economies are no longer entirely outside the key conversation, but actively participating within it. Whether that subtle tilt endures and becomes a permanent change will depend entirely on Iraq's consistent ability to maintain credibility and on whether the world's major financial institutions are truly ready to embrace a more diversified monetary future, one that explicitly challenges the decades-long dominance of a few major currencies. The mechanics underlying this historic event are both intricate and critically important when a trade order for IQD is now placed. Understanding what happens behind the scenes is crucial, which specific exchanges are routing the orders, which pools of liquidity are processing them, and what complex conversion paths are reliably linking the dinar to major currencies like the US dollar, euro, or the British pound. In these early foundational hours, consistency will be extremely elusive. Spreads, the difference between the buy and sell price, may vary dramatically between different trading platforms, directly reflecting the profound uncertainty about market depth and the long-term commitment of market makers. Some brokers may not yet support full two-way conversion. Others may impose strict execution limits or rely on slow, batched settlements. Orders could partially fill or even completely fail as the entire infrastructure struggles to adapt to live volume. This is not necessarily manipulation. It is simply the natural friction of a newborn market structure. Traders must master and understand the execution mechanics, identify their counterparties, and comprehend settlement protocols before committing any serious capital. Transparency in trade routing, clearing procedures, and general exchange behavior will quickly become the true measure of this market's maturity and credibility. The institutions that are able to master this early complexity, those that can reliably offer transparent spreads, dependable execution, and credible clearing, will be the ones that decisively set the tone for how the IQD is ultimately perceived globally. Beneath the surface excitement lies a vast, complex web of trading systems that are learning, adapting, and recalibrating in real time to accommodate a currency many analysts never expected to see fully revived. As the media frenzy inevitably builds, observers both within Iraq and across global financial circles must remain absolutely clear-eyed and objective. Expect a relentless flood of sensational headlines, speculative blog posts, exaggerated claims of overnight millionaires, miracle reevaluations, and endless conspiratorial narratives of hidden wealth. The noise will be deafening, but the wise will diligently filter that noise for the crucial signal. Focus instead on the verifiable fundamentals, objective data such as trading volume, the tightening or widening of spreads, official regulatory announcements, and the observable behavior of institutional participants. Watch closely how global central banks respond, how major liquidity providers price their risk, and how daily trading volumes evolve. These concrete metrics, not internet rumors, are the only reliable indicators that will reveal whether the IQD's ascent is genuinely sustainable. Discipline and discernment will be the essential qualities that separate genuine investors from mere dreamers. History has repeatedly shown that every true market revolution begins with a high degree of hype and hope, but it can only survive and flourish through sound governance, deep liquidity, and sustained trust. This moment invites global fascination, but it absolutely demands professionalism. For every voice loudly promising instant wealth, there will be a team of analysts quietly and diligently studying metrics and complex models. The guidance remains clear: follow the data, not the drama. Because amid all the chatter and speculation, one undeniable truth stands firm: the Iraqi dinar has now definitively stepped out of the shadows of obscurity and into the bright, unyielding light of global financial scrutiny. The sleeper has indeed awakened. The Iraqi dinar is no longer a forgotten relic or a collector's curiosity. It is a live, active part of the living conversation in international finance. Traders are intently watching order books. Analysts are urgently revising their risk models, and hedge funds are actively probing for arbitrage opportunities. The global financial community has shifted from a stance of dismissal and skepticism to one of cautious curiosity and close observation, which in itself represents monumental progress. Yet, amid the palpable excitement, prudence remains absolutely paramount. Nothing about this new, volatile landscape guarantees success. Volatility will be wild, liquidity will be uneven, and market sentiment will be mercurial. What was once fantasy is now fully quantifiable. What was long dismissed is now officially displayed, parsed, and traded. The dinar's dramatic return to relevance will relentlessly test the courage and, more importantly, the patience of everyone watching. Institutional capital will inevitably arrive, but it will do so only after rigorous analysis and with great caution. For Iraq, the challenge ahead is truly monumental. They must now prove, through unshakable stability and policy consistency, that this dramatic awakening is not a short-lived dream, but the durable start of a new, long-term reality. The frontier is open, but the journey through its rugged terrain has only just begun.